Is it true, Tom, that you need to sacrifice returns to when you invest in a socially responsible way?
No. It's a simple answer. And, you asked a question earlier about, what's the kind of evolution of governance, and I touched on a little bit personally about what my motivation was. And there was also a point in time for me of this recognition and this understanding of going that these things are no longer mutually exclusive. Right? So once upon a time, somebody went, I either have to focus on returns or I have to focus on sustainability. It was either. That is simply not the case anymore, and we've got a huge amount of historical data to prove that companies, either at an individual level or portfolios, that focus on sustainable companies, so highly rated sustainable investments, outperform less sustainable peers when we look at it from a perspective. The data is in. I don't think it can be too well disputed. But of course, it comes down to everybody's individual take. But my view is that it's no longer a sacrifice, and I think people should be very cognizant of that. It's about going, I now have the opportunity to go, I will get return, I will get strong performance in line with any other market expectations, and I no longer have to sacrifice my values in order to achieve that.
And I think as a tip for investors, you've got to be careful when you're investing in a socially responsible or ethical type way. It's really dangerous if you take a short-term view on this, because almost by definition, you are investing in a way that's different to the market. So if you compare the performance of say an ethical fund in your super versus another super's non-ethical funds, it will be vastly different in terms of the composition of those funds, especially in Australia. We're an extremely concentrated share market with the top 10 companies being, a huge chunk of the overall market. That it's when you do start, screening, mining out or screening banking or financial services out, like you take this huge part of the market away, and therefore your returns will definitely be different to market. And so it's more important, I think, in this space that you are taking that long-term view so that you can see, because as you see, the stats are showing that over the long term, there's no clear downside or a difference. So it's really, but you've got to get that long term. It's not to say that along the way that things could be going really well or less well, depending on what's happening in the world and what the positive and negative screens that you might have included or excluded from your portfolio.